Hey guys, welcome back to the Joshua Earp YouTube channel, and we're going to be talking about the latest cryptocurrency price action and kind of like what my thoughts are in the market and what I'm personally doing and what I recommend and a few things to be careful of as well. Okay, so obviously, when we look here at the monthly and we zoom in, we can see that, we are respecting right now this line, okay, this very thick yellow line. And we've hit it perfectly and then started to bounce up. But, however, on the monthly, you'll see that as soon as we hit this top spider line, we went a little bit and wicked a little bit above it, we immediately got rejected on the monthly, and vice versa with this one down here. And so what I want to say is that, even though it is possible, let's see, today's Friday, so usually in the weekend Bitcoin dumps. It's hard for me to remember a time on the weekend whenever it pumped. Not to say it doesn't happen, but we seem to be respecting these long-term trend lines that we call spider lines, okay, that are all the way back from 2017, like basically right after, actually no, 2018 I believe is when they're from. So that's what we're looking at here on the monthly, and when we go to the weekly as well, you can see we're also struggling to get above this spider line. Let's check out the daily. Then we'll zoom out, and that way we can see things a little bit better. So when we look at this on the daily, as I mentioned, we are basically, and I'll zoom out so you can also see the weekly and monthly open. So if you look back on my my last video, I made, or I think, what was it, 2 videos ago, when the price action was down here, I said I was waiting for it to come back above the monthly open before I would even personally entertain a long. As you can see, we broke above the monthly open and we're continuing to go higher. And I've also gotten rid of the triangle that I had on this chart because it's just too short term of a pattern for me to be concerned with. I'd rather be going off the long-term confluence of these spider lines. And so that's basically what I see in the near immediate future. It is the beginning of the weekend, so this possibly could be the top for the weekend. I personally think we have at least some more upside to go. I think that, this type of pattern right here where, Bitcoin's coming up and down and up, and then now we're going back up, and we could potentially hit this spider line again, maybe slightly above it, and then, we could go back all the way down to at least the monthly open, even in a bullish scenario. I believe that could very well be possible. And also at the same time, we could even see further bearish, or sorry, in this case, bullish activity, simply because we have another spider line right up here at around the 24,000 or so level, okay, kind of give or take. And so, what we could see potentially is with this current price action, let's go ahead and take our tool. So we come up right here, and we could potentially see, it come back up, maybe test this as support before continuing up to the upside. And then this would be the point in which I believe that we would see some resistance if we don't already see some resistance before that. It's very possible that we just kind of stay in this channel between these two spider lines. And, it's very, very possible that that's what happens. And not only that, but if we do break above, I believe right here ultimately is where we will begin the descent into, continuing out this bear market. And there's some very interesting things I want to share with you guys that I think will be very eye-opening for you. So we're going to go ahead and share that as well. But I just want you guys to know that it's not a time to be taking too much risk. It's not a time to be gambling. You want to wait for a known support line if you're going long, or you want to wait for a known resistance line if you are going short. And you always got to remember and identify the overall environment. Okay, before you make any trade, it's all about the overall environment. And right now we are in a bear market. And so even though you can make money going long in a bear market, is the wind really against your back? Or is your back against the wind, is what I mean to say. Because even if you long in a bull market, and let's say there is a temporary drop or whatnot, or a correction, you can just kind of tough it out, as long as your liquidation doesn't get hit. And your back is always against the wind. There's nothing to worry about. But whenever you're going long in a bear market, And let's say, for instance, maybe your analysis or initial guess was wrong, and it starts to tank, and you just keep your long position open, and then you just keep playing defense, dollar cost averaging back in. That is a very dangerous way to trade, especially if you are on leverage. All right, so make sure you don't do that, guys. You want to mitigate your losses as much as possible, especially with trading. There's 5 main outcomes of your overall trade, and that is, a small win, or actually we'll start with break even, a small win, a small loss, and then a big win and a big loss. So as long as you pay attention to these long-term trend lines and spider lines, and as long as you enter at the right spot, meaning if you're longing, you enter at the support of the spider line, and then you would put your stop loss, roughly below it. Give yourself a little bit of space because it always could come wick down, right? But at the same time, if you're going short, wait till we hit a known line of resistance, and then you would just set your stop loss somewhere above the wick. You want to give yourself a little bit of room because you can get stopped out. And you don't want to be using too much leverage, because not only is your liquidation price higher or lower depending on what you're doing, but at the same time it's just really not a good thing to do. And so that's what I'm personally looking at. That's what I'm doing. And like I said, I'm just, it's already too late, I feel like, to go long here. So I'm going to wait till a confirmation of a rejection. It's so important, guys, that you wait for a confirmation and candle structure of a rejection, either at this level or at this level. And then that's whenever I personally am going to open up a short. And even though I'm a Bitcoin bull in the long term, and the reason why is because really I'm about to show you why. And then one thing I also wanted to point out too, let's go back to the weekly, is, it's in the cards right now to have a retest or somewhat of a retest of this red line. So as you can see, ever since we entered the bear market, we have this descending red line right here, and we've always, respected it throughout this bear market. There has been a time where we came up and tested it, but it has always hit this line. So it is possible that we see a bit of a suckers rally or relief rally to come up, and then we would see further action going down. Or maybe it's the end of the bear market, only because this yellow line, which on the weekly, as you see, it's always respected this yellow line besides March 2020 as the bottom. So we're very close to the line that has always indicated the bottom. I'm not saying it's the personal bottom. I'm just saying that this line has always predicted the bottom. So hopefully we'll be good to go. But it isn't until we break to the upside of this red thick line, that is whenever I will fully become bullish, because that means that the trend is now over, especially if we have a retest. So just to draw this out, it's always good to do that. We may come up here, we may break out, we may come and retest it before kind of continuing to the upside or even to the downside. It just kind of depends, right? Things in the market can switch on you on a dime. Things can literally change on a dime. And so that's kind of what I'm thinking. That's what I'm looking at. And also at the same time too, there's a few other things you guys want to be aware of. So let's go ahead and look at the DXY. There's another interesting thing I want to point out. We covered a little bit of this on the last video, but there's also just something new that's came to light that I want you guys to be aware of. So let's go to the monthly of the DXY, and let's just take a look, okay? So right now the DXY is in price discovery. And so the interesting thing about this is that the next line of resistance, besides this fan methodology of technical analysis, would be horizontally $123. Okay, and the higher the DXY goes up, you're going to see other assets come down because the strength of the dollar is basically accruing. Now, the interesting thing here is that at the current price that we're at right now, which is 107 on the DXY, back in 81, okay, when we were at the same place, the same price, from 81 all the way up to this high, which is at 85, that was several years that went by between the price point that we're at now, back in 81, to now 1985, or sorry, not now, but basically to 1985. And so that's several years. And so if history repeats itself, which always remember, if history doesn't repeat itself, it usually at least rhymes. So always remember that. But if we end up getting anything close to what we've seen in the past, then that would mean that we could potentially, I'm not saying this is going to be what happens, but we could potentially, based off of the previous chart history and price history of the DXY, we could potentially be still another few years out at minimum in this specific bear market to where we would see a transition into the bull market. Okay, so I know it's not the best news, and let's all hope that it doesn't play out, but this is just something to consider, that literally the same time, back when we were at this price, it was several years that we saw continued upside for the DXY, which means that the asset classes such as Bitcoin, real estate perhaps, other markets, technology markets, even just the S&P 500, we could potentially see further downside. Okay, so I want you guys to be safe. I want you guys to be smart about it. Don't let your trades go too far in the red. Make sure that you set the right stop losses. Give yourself a little room, but not too much, just in case. I like to enter at certain points in the market where if it does come and hit my stop loss, I'm actually glad, because that means that would indicate a trend reversal, and therefore I'd rather lose a little bit than lose a lot. Because remember, the 5 possible outcomes of your trade, you just want to eliminate the 5th one. So thank you guys so much. Please smash the like button, please subscribe, and hit the bell notifications to all if you haven't already, and help share this video so we can help warn as many people as possible and let them know and be educated on what's going on. And also, don't forget to leave a comment below, because I'm really interested in hearing your thoughts and seeing exactly what it is you guys are thinking, what you're doing, what your trades are looking like, and all of that. So thank you again very much, guys, and I'll talk to you in the next video.